from CNBC TV 18 headquarters in Mumbai.
Good morning. Welcome to Morning Call. I'm Lata Venkatesh, and with me are Sonia Shenoy and Anuj Singhal. We kick off a fairly important week, even if it is fortunately truncated by one holiday. We're going to get a bunch of numbers. The markets also have to react to the big boy Reliance numbers. But taking the attention today will be the Chinese GDP numbers. The important point is they are not as bad as feared. 6.9 is not the ideal 7% number that the Chinese government was hoping for, but it's better than the 6.8% poll that the street was throwing up. As well, if you looked at the quarter-on-quarter numbers, it's higher, 1.8% compared to 1.7% that the street was expecting. Not bad, but if you looked at the internals, it's not looking good at all for commodities. I mean, steel output is down 3%, power consumption is down by 0.2% year-on-year. Coal output is down about 2.2%. So quite clearly, industrial growth has not helped, and that number is staring out at you, 5.7% compared to expectations of 6%. So industrial growth is bad, and therefore I expect that commodities are not going to get anything positive from the Chinese numbers. But as far as equities go, not a bad set.
Oh yes, not a bad set at all. I mean, we wake up to positive cues, whether it's the FII and the DII numbers, where we've seen buying action. You know, FII has bought almost 500 crores on Friday. Whether it's the Reliance numbers, where the numbers were better than expected as far as the gross refining margins are concerned. So lots of positive cues stacked up.
I would think so. Domestically speaking, Reliance will be a positive for the Nifty itself. As well, as you've been saying, the FII numbers have been steady. I think the CNBC TV 18 exclusive coming in from Piyush Goyal that the Discom reforms are set to kick in this month. I mean, the cabinet note is finalized, and cabinet may approve as early as this month, which is what, 20 days from now. It gives a sense of expediency and speed about Discom reforms. That should be very good news for the banking stocks. But that said, I think the results, other than the big boy Reliance, have not been very good. Look at Tata Sponge, look at Tata Metallics, a whole host of numbers, Swaraj Engines, all the numbers that came over the weekend. The top line is a tragedy, and I think that will not be lost on the markets. Probably you will say it's discounted because these are still lagged numbers, but I think the underlying Indian growth story is not going to look very good if you go by the mid-cap earnings numbers. That fear still rankles for me.
All right, well, last week was a good week for us. We managed to conquer that 8220 hurdle or resistance level. Anuj, morning. What's the prognosis for this week? The good trend will continue, you reckon?
Morning, Sonia. I think today is important because I tell you what happens when a market trades in a particular range for far too long, then it has a breakout or a breakdown. And after that, there are two possibilities. A, that breakout is real, and then you make a lot of money on that direction. And B, there's a minor risk of that being a false move and the actual break takes place on the other side. So that is why today is important, because the Nifty broke out of the 8,000 to 8,200 kind of band and made a move on the upside. But cash market volumes were low, and there was no major delivery-based buying in index stocks or index heavyweights, except for Tata Motors, which had 250 crores of delivery-based buying. So that is why today's sort of follow-up is important for the market. I take your point. Reliance came out with good numbers. The market should reward that, even if the stock should not run away, but the stock should open higher. That should be a positive. FI buying, DI buying is clearly visible. The FI selling in index futures is now getting interesting because for the better part of the first half of the series, FIs kept buying, the markets kept going up. And now when the market is trying to break out, there's not just profit booking. FIs have been unwinding long positions. There's also fresh short build-up. So the sense you get is that, if the market has to reverse, it really has to reverse from here. So that is why, if you've been long on the market, you keep your stop loss intact, maybe take it to 8,200. But if you've not been long, you should have been long, by the way. If you're not long, then maybe today is not the good time. Then now you wait for either a 50-60 point pullback, or you wait for a bit of a confirmed breakout before you go out and buy. There's quite a bit of build-up at 8,300 and 8,400 calls, and there's been equal amount of call buying and call selling. So the sense you get is that it's going to be tough for the market to continue to go up. There will be resistances on the way up. 8,400 will also be the 200-day moving average for the market. So that's where the big resistance would come. But one thing is that the Nifty's base has now moved up from 8,000 to 8,100, and that's why even for your long trades, the stop loss has moved up to 8,100. But we spent far too much time looking at the Nifty. The fact is that this year has been about bottom-up stock picking. This year, so many stocks have made money. And look at this month. There's so many index stocks have rallied 20-30%. Reliance, Tata Motors is a case in point. Tata Steel is a case in point. Hindalco is a case in point. This is a market in which you want to buy stocks. And after that, have your stop losses. And you'll make money. This is a buy on dips market for individual stocks. Looking at Nifty too much is not going to give you too much joy. Though, even on the Nifty, you can make money if the breakout is confirmed.
All right. Well, let's talk about our first cue of the day then. As Lata